Hello again, everybody. So once again, I'm Tim Erblich, Ethisphere's CEO. And for those of you who were at our dinner last night, I started with a passage from Dr. Seuss. So this is turning out to be a very literary experience. This is something that Erica talked about before. This will be our first opportunity for a book signing. So I think we have a really interesting and inspiring lunch program for you. Who here has read this book, Flash Boys? Anybody in the room read the book? Okay, I think after this, you will all want to read the book. And we've actually got some copies. But the protagonist is an amazingly brave and inspiring guy called Brad Kutsuyama. So we're going to have a sort of Q&A with Brad and I. He's going to tell you a little bit about his journey and his story. And hopefully you're like me and you will find it interesting, but also inspiring, and finally, hopefully, you can learn something from it.
All right, thank you. Is this on? Thank you. Can everyone hear me? So that actually came out 2 years ago, almost, on March 31st, 2014, and actually had a pretty dramatic impact on my life since then. I actually didn't realize how many people watched 60 Minutes, but a couple quick facts. I think that was a 15-minute segment. After the end of that segment, we had 500 emails sent to the IEX trading careers at IEX inbox, and I had more LinkedIn requests than I actually had connections. So it was a lot of people watched that. But amazingly, Michael Lewis, and so I saw a few people had read Flash Boys, but Michael Lewis has written The Big Short, which just won an Oscar. He's written Blindside, Moneyball, Liar's Poker. Before I had met Michael Lewis, actually, he was my favorite writer. I had read almost everything that he had written. Met him sort of by accident, in a way. There was a high-frequency trading computer programmer from Goldman Sachs that actually got thrown in prison by the FBI for taking computerized trading code from Goldman Sachs when he was going to his new job. He gets thrown in prison, and his lawyer calls Michael Lewis and said, "You have to come interview my client. He got thrown in prison, and no one actually knows what he took." And something like that intrigues Michael Lewis. Michael Lewis definitely has an axe to grind a little bit, I would say, with Wall Street. So he starts to do research into high-frequency trading. And how many people in the room have read or seen The Big Short, the movie? All right. So Steve Eisman, who's played by Steve Carell, he's got three kind of team, his henchmen, the three guys that work for him. I'm friends with those guys. And when Michael Lewis went to them to ask about high-frequency trading, they said, "You should talk to this guy, Brad Kutsuyama." And it just so happens that at that point in time, I had left my job at RBC. I had started a company called IEX, and we were trying to raise funds to build a new kind of stock exchange. And I spent the first 3 months with Michael Lewis helping him write a story about somebody else that ended up coming out in Vanity Fair. As Michael Lewis started to ask more questions about high-speed trading, and he started to learn more about IEX, he became interested in writing about us. And it went from, I'm going to write a short story about IEX, to I think this could be a big book. And at the end, he goes, I think this is going to be explosive. The funny part is that as we were going through writing this process, there were some times that actually made me very nervous to talk to Michael Lewis. For those who know me, the last place on earth I ever thought I would end up is being hated by an industry. And it was funny, just in the USA Today, I think about 2 weeks ago, there was a giant cover page, my head on the page, and it says, "Why Wall Street Hates This Guy." And my mom sent it to me and said, "Wow, this is a pretty harsh headline." I never thought I'd be in this position, largely because I've spent my entire life trying to get along with people. And what's funny, what made me nervous is that when Michael Lewis wanted to write about us and me personally, I was nervous because when you read Liar's Poker or The Big Short or you read Moneyball, these characters are larger than life. They're huge, they're rebels in a way. They've disrupted things. They've done things very differently. And when Michael Lewis was writing Flash Boys, he sat me down once and said, I'm having real trouble writing about you." And I said, "Okay, well, why?" And he said, "Because you're pretty boring. You're a pretty normal guy." which was a bit discouraging to hear. And he was telling me something interesting about your childhood. I said, my parents were divorced. And he said, oh, great. So he starts writing on his piece of paper, and he's like, well, tell me more about that. And I said, well, my dad and mom are still friends, and they still golf together. And he comes over for Christmas, and he's like, scratches it out. He's like, that's not going to work. So he has to fly to Toronto. I'm Canadian. He has to fly to Toronto to meet my stepmom, or my mom, my stepdad, and some friends. Flies out, and he comes back, sits me down, and goes, I think I figured you out. And I was like, oh, okay, here we go. And he said, you were never looking to get into a fight. And he said, the fight found you, and you decided to fight back. And that was actually the first time through the process of working with Michael Lewis that I actually felt comfortable with whatever he was going to write, because I actually, when I really sat back and took inventory of it, that's really what happened. I'll explain to you a couple of the decisions that kind of ended up on my doorstep, and in many ways, I'd like to think, especially in this room, and we've had the pleasure of kind of working with Tim and Ethisphere and their team. Especially in this room, I would say a lot of people in this room, if faced with the same set of decisions and the same circumstances, would have done exactly the same things that I have done and that my team has done. And life is a lot about making decisions. Very few times when you're making them do you realize that will be a pivotal moment in your life, but it just so happened along the way that it ended up being pretty pivotal in the way my life has sort of turned out. So on 60 Minutes, it kind of explained to you a little bit about what was happening, and let me just spend a brief moment telling you about how I stumbled into this problem. So my background was a trader. I traded energy stocks, I traded technology stocks, I worked for the Royal Bank of Canada. It was the only company that I actually ever worked for in my entire life. I was an intern there in the late 90s. 2007, I ran RBC's trading desk in the United States. And let's say I trade on behalf of mutual funds and pension funds and hedge funds. One of them would give me an order to buy 1 million shares of GE. So I'd go into GE, I'd pull up a ticker, and I'd see that, when you look at the tickers in some of your stocks, I see 100,000 shares of GE offered for sale, offered to sell at $25.01. In 2006, I could go into my computer, type in buy 100,000 GE 2501 go. It would come out, and I would buy 100,000 shares of GE. The stock would move higher. I'd leave 900,000 to buy, move on with my day, and keep trying to buy it. But in 2007, I'd see 100,000 GE. I tried to buy it. I'd only get 80,000. In 2008, I'd see 100,000 GE. I tried to buy it. I'd get 60,000. By 2009, I'd get less than 50% of what I saw on my screen. It drove me crazy. So I talked to our tech guys. I'd say, tell me what's happening here. I said, I see 100,000. I try to buy it. I only get a fraction of what's there. And they'd say, well, someone else wants to buy GE at the same time you do. It's a coincidence. So I said, okay, I'm going to buy 60,000 GE at 2504. And I'm not going to press the button for 5 seconds. And if while I'm counting, the stock's trading and it's moving up, you're right, someone else is out there trying to buy GE. But I said, nothing's going to happen until I press the button. Meaning it's not a coincidence someone else wants to buy GE. The only reason they're buying it is because I want to buy it. So I'd count to 3, 5, 7, didn't matter what it was. I'd count, nothing would happen. I'd press the button, and I'd completely miss the stock. And the stock would trade higher. Now the problem is, every time the stock trades higher, my customer, the mutual fund, was entitled to buy 100,000 GE at 2501. We saw it on the screen. And when we end up paying 2507, even though it's pennies, it adds up millions and millions of times a day. This was happening to traders at RBC, to myself, to people that worked for me. But it turns out that it was happening across the industry. People couldn't buy or sell what they saw on their screens. And in 2009, kind of by a stroke of good luck, RBC asked me to take over another business. They wanted me to run electronic trading. And what that meant is I went from running a group of traders to running a group of computer programmers and network engineers that were actually building algorithms that traders could use. Long story short, here's what was happening. GE is listed on the New York Stock Exchange, but it doesn't mean that all shares of GE trade hands on that one market. At the time, the 4 largest exchanges actually were BATS, Direct Edge, NASDAQ, and the New York Stock Exchange. So actually, there was as many, the 100,000 shares that I saw on my screen could have been 5,000 here, 10,000 here, 20,000 there, as many as 13 different exchanges. Let's just say, to make this easy, 25,000 shares were offered to sell at each of those 4 exchanges, BATS, Direct Edge, NASDAQ, and the New York Stock Exchange. It turns out that each of these exchanges are physically located in different geographies. And that when you turn on CNBC and you see a bunch of people running around on the floor of the New York Stock Exchange, no trading happens on that floor. Nothing. All of the trades from that floor are beamed out to a data warehouse in Mahwah, New Jersey, where all the buyers and sellers are matched. And it turns out that RBC, when we were trying to buy 100,000 shares of GE, I'd hit my button, a signal would go into the basement, and it would blast 4 orders out to these 4 exchanges. And because they were located in different geographies, they would get there actually at different times. The first exchange closest to me, BATS, was located in Weehawken, New Jersey. Direct Edge in Secaucus, NASDAQ in Carteret, about 30 miles south, and the New York Stock Exchange was 60 miles north in Mahwah. The difference in arriving between the first and the last exchange, it's going to sound crazy, was 2 milliseconds. It's 300 milliseconds to blink your eye. I thought 2 milliseconds was pretty fast, and one of the network engineers that I hired, actually the guy who basically said it's a skim, Ronan Ryan now works, he's a co-founder of IEX. He worked as a network engineer on behalf of high-frequency traders. I met him through a friend. I hired him at RBC, and he said, I got bad news for you. I just finished building networks that can connect from the first exchange to the last in 476 microseconds, which meant that he could pick up a signal that I'm buying GE at BATS and race me to the next exchange 4 times faster than my order traveling there from RBC. He's doing 2 things. Number 1, he wants to cancel all of his sell orders. He does not want to sell GE anymore because here comes a big buyer. And number 2, about 50% of the time, he was buying GE in front of me to sell back to me at a higher price. And we call that electronic front running. This is what was happening. So the very first thing I say to him is, I said, okay, Ron, I got it. What do we do? Can we get faster? Can we be 476 microseconds fast? And he said something kind of funny at the time. If you're Canadian, you might not think it's funny. But he said, we're the Royal Bank of Canada. We're never going to be faster than anybody. Which I don't know what that says, but we were never going to be faster than his customers. But what we could do actually was get slower. And what I mean by that is we created a software program that actually, theoretically, if you think about it, sent orders out at different times to try to arrive at all exchanges as close to simultaneous as possible. In a very literal sense, send the order to New York first, send the one to BATS last, to try to arrive at all places at the same time. And we built something like that, and we got the variance in arrival down to 290 microseconds. Less than the 476 Ronan's old customers needed to electronically front-run us. Our fill rates went to basically 100%. We solved it. So when I talk about life being a lot about decisions, the very first decision I was faced with, and I didn't really spend that much time on it, I remember going home that night thinking, oh my gosh, we figured this out. This problem had plagued me as a trader for 2 years. Now all of a sudden we ran these experiments and we figured out that staggering when we sent the orders out made it impossible to be front-run. And the very first thing I thought about is there was no way RBC was the first place to discover this. And there was no way we were 5th or 10th or maybe 15th or 20th. But every single person who had figured this out was part of the problem. They were doing the racing. They'd set up little proprietary trading shops, and they were just going out there to game the system. The very first decision you're faced with is once you figure out how the game's played, do you jump in on the game, or do you try to stop the game? And whether people find it hard to believe or not, our inclination, without question, was to stop the game. Mostly because we felt like I took my job seriously. I traded on behalf of pensions and retirements, and money out of their pockets was money out of people's 401ks and retirements, and there was just no way we were going to let this go on. We went on an education campaign. RBC went from number 19 to number 1 in electronic trading. It was a $100 million business almost overnight, just skyrocketed. The problem was, one client came to me one day, RBC's revenues went like this, and then they started to flatline. And they said, we love what you've done, but you've only solved 3% of my trading problem. I said, what are you talking about? They said, you've solved all of the trades that I send to RBC. What about Goldman? What about Morgan Stanley? What about Credit Suisse? I want to trade with all of these places. I can't send all my trades to RBC. Then I was faced with choice number 2. What do you do about that information? And in reality, if you ask yourself, why does this problem exist? It exists because the stock exchanges themselves sell high-speed data and high-speed technology that allows high-speed traders to take this information and race ahead of ordinary investors. The exchanges, you'll probably be shocked to know this, stock exchanges make more money selling that data and technology than they actually do from matching buyers and sellers. They don't make money really from trading anymore. They make more money selling the high-speed connections and the co-location. Our inclination was, you know what, let's quit our jobs and build our own stock exchange. And as crazy as that sounds, a lot of other people thought it was even crazier because it took us 9.5 months to raise money. No one wanted to give us money because they said the world does not need another stock exchange, especially one that wants to disrupt Wall Street. But in the end, I'll give you 2 quick points and then we'll get to questions. The one thing that we did with our exchange is the opposite of selling co-location, bringing people close to give them that speed advantage so they can pick up a signal and race ahead, was pushing everyone 38 miles away from our exchange. This is probably the most unprofitable piece of technology on Wall Street. It's 38 miles of coiled cable in a box. And every person who sends an order to IEX or gets information from IEX has to go through the coils. It is the exact opposite of selling co-location and space right next to our matching engine because the high-speed traders hate it because it slows them down. People call it a speed bump. But what the speed bump has done, and this speed bump is 350 millionths of a second, 1/1000th the speed of you blinking your eye. But you know who loves the speed bump? Long-term investors. This is the growth chart for IEX. We were one of the fastest growing stock markets in the United States history, and now we're applying to become a stock exchange, which has created a national debate, which is why the USA Today says everyone hates me. But the long story short is that we gave people an option. We gave people a choice to make a better decision on behalf of their customers, and more people are taking it. So the path really to riches for IEX, and even for the information that we had, was to become a part of the high-frequency trading game. If you line up, we have people that worked at the regulators, worked at exchanges, worked at high-speed traders, all working at IEX. The best thing to do with our knowledge actually is to be a high-speed trading firm. But in many ways, what we're trying to do is just create a fairer market to give people a choice, and most importantly, to represent long-term investors, people who invest over years, who shouldn't care about microseconds, who shouldn't have to invest tens of millions of dollars every year in technology just to keep up with people who are racing. So I'll end the talk there, and I think we have some questions from Tim. So thank you very much.
Cool. So you quit your job, head of trading or head of electronic trading for RBC. So you made a bunch of money. You were doing well, and you quit your job to do this. So what was the thing that said, this is what I need to do? I need to wake up this morning, I need to quit my high-paying job and do this. What was that decision like?
It wasn't easy to convince my wife that was a smart idea. No, I mean, it was funny because we have a 4-year-old son now. IEX is 4 years old. And he was born 3 days after my last day at RBC. So there was a lot of stuff going on in our personal life. I think there were 2 things. And I think actually it really kind of ties into what it is that you're talking about here. One is I felt like the world was becoming more transparent. And by that I mean that it would be a lot harder for people to hide from their mistakes. It'd be a lot harder for businesses to make money in opaque ways, and I felt like there was this big transition happening on Wall Street. I remember reading an article talking about Goldman Sachs wanted to pay their employees enough to keep them from going to competitors, but didn't want to pay them too much to enrage the public. And I remember reading that saying, wow, like societal forces are changing the way people are viewing kind of their place in the world. I think that was part one. The second part largely was that when we had this great success at RBC, and it's kind of like winning the Super Bowl in a way. All of my employees, including myself, were getting job offers, much more money than we were being paid at RBC at a bunch of different firms. So the value of everyone on the team rose. And I realized that there would be no way to keep kind of our group together. I mean, there were 9 co-founders of IEX. So it tells you, like, I didn't jump into this on my own. There were 8 other people as crazy as I was. But part of it was about keeping this team together. I think we found that we became very dedicated to the mission. And I'm a capitalist, so it's not like we're not a not-for-profit organization. We pondered it for a bit and kind of left that pretty quickly. Just it's hard to get people, I think, to do that. But we think we can make money doing right. And I think it was just a very rare opportunity to take our skill set and to apply it to something that we really, really believed in, that we thought actually could be very good for us and our families. So, but it wasn't an easy decision. I remember on 60 Minutes, Steve Croft asked this question, and at that point, the only person who actually knew what I made was my wife. My parents didn't even know. He said, "You made millions at RBC." I was like, I guess everyone in the world knows that right now. Thank you, but it wasn't that hard of a choice.
So one of our panelists was from LinkedIn, and then I had a conversation with him afterwards, and he said, we're really in an interesting business. It's not really heavily regulated, and some of the things that are going around privacy around the world, the rules aren't written, right? So you're really in a place where, in a sense, the rules have been written, right? But you're really trying to disrupt an industry, right? So what's that like?
I mean, I think, what's interesting is that financial services are so heavily regulated, and it leaves a lot of room for interpretation. And at times, I feel like if they left the rules to be more principle-based, there would actually be less nefarious activity. Because when you tell someone what they can't do, now they understand exactly how far to the edge of what they can do they can go. And I think that becomes really challenging.
That was a great point, and that's what Eamon from LinkedIn actually made that same point. When the rules of the road aren't really written, then sort of common sense and fair play guides your decision.
Yeah.
So I didn't mean to interrupt you.
No, but a lot of what I just talked to you about is legal as defined by rules. And the other hard part about working in a regulated industry is that the entrenched competitors. Right now, IEX is applying to become a national stock exchange. The last 4 exchanges received a total of 3 public comments. We're in this public comment period now. We've received over 400. We've received more comments on our exchange than every exchange application in the history of the United States. 95% of them are positive, but New York Stock Exchange, NASDAQ, BATS, a bunch of high-speed traders absolutely don't want us to be an exchange. And they can use a 500-page rule book, pluck out words, and say, you're violating securities. It's not allowed because of the rules. So I find that rules, kind of in a weird way, favor incumbents and prevent disruption. And I think that's why people spend so much money on lobbying and so much money on the machine, because they want to keep disruption out. And I think it's the wrong answer. But unfortunately, it benefits the people that are a part of that.
So tell everybody a little bit more about your application to be an exchange. What does that mean? Because right now you can trade on your platform, right? If you're a pension fund or an asset manager, and say, I like what you guys do.
Yes.
I want you guys to succeed. And that's what they talk about in the book that I thought was kind of interesting, is people within the industry did want you to succeed.
Yeah.
And some of the players that you wouldn't think of.
Right.
Publicly.
Yes.
Right?
Yeah, what's interesting is that, so I guess there's 2 parts to that. So number one is that we're what's called an alternative trading system. And there are 40 of them in the United States. There are 13 stock exchanges. And there are limits to how big alternative trading systems can grow. So we've gone from number 40 to number 2. We do about $5 to $10 billion of notional transactions a day on our platform. But we need to become an exchange, number one, to be able to scale and to continue to grow. And number 2, to list companies. A lot of companies, public companies, have read Flash Boys or have been completely unsatisfied with the answers they're getting on volatility and all these things. That want to list on IEX, and we need to be an exchange to do that. So there are, I guess, scale reasons to grow. Another surprising thing, and this is, I guess, a bit of a funny story, is that one of our largest clients is Goldman Sachs. Right. And I remember, so right now IEX, it's only brokers can be members of IEX. So we're owned by the Capital Group. They are one of our owners. But Capital Group can't send an order directly to IEX. They have to go through a broker like RBC or like Goldman Sachs. And the day before we launched, the 4 executive founders and Michael Lewis went out for dinner. And Michael Lewis said to us, he goes, what needs to happen for IEX to be successful? And I said to him, one of the big banks needs to buy in, needs to really get behind us. And he said, who do you think that's going to be? And I said, I think it's going to be Goldman Sachs. And Michael Lewis flipped out. He was so angry. He's like, how can this be? I can't believe it. And when you read Flash Boys, sorry if I ruin this for anyone, he spends the first 90% of the book destroying Goldman Sachs, hammering them. They're this, they're that, they're this, they're that. And here I am telling him I think Goldman's going to be the one that kind of helps us. And he said, why? He goes, how can you trust Goldman Sachs, is what he said. and I said to him, I don't trust Goldman Sachs. I said, I don't know, I didn't know a single person that worked at Goldman Sachs before I started IEX. Like, it's not like my brother works there or anything. I said, I don't trust Goldman Sachs, but there's two people at Goldman Sachs that I trust. I trust them. And he's like, do you think they'll meet with me? And it turns out that they're two of the very few people who would go on the record and talk to Michael Lewis. And it's really funny. Companies, in a way, are containers of people. Their brands are built on the people that represent their brand. And it was very easy for me to trust these people. They continue to be a great client. I continue to trust those people. But it wasn't about trusting the company. It was about trusting the people that worked at the company. It was a very different thing. I think once Michael Lewis's anger subsided, he heard that point. But really for us, I think what I'm really proud of, and I'll tell this to our team all the time, is that we created an alternative market. It's a market-based solution. And we gave brokers like Goldman Sachs the option to choose whether to deal with us or not. And they have chosen to do that, and it's in the best interest of their customers. We gave them a reason to align closely with their clients. And in a way, ethical disruption, whatever it ends up being, we're very proud of that fact. I'm proud that they're a client of ours, and that they're a good client of ours. And it has nothing to do with the way that we've built it. We haven't built a back door. They don't own us. Everything about us is out there for the world to see. We just gave them a better choice than other places were giving them, and they made it. So I give them a lot of credit, but without that choice, who knows what people will do, right?
Right. No, that's great. So we probably have time for 2 questions for Brad, and again, Brad's going to be out there. And then if we don't have it, I've got a couple more. But any questions from anybody in the audience? One right over there. Is that Gordon? Hello, Gordon.
You probably answered this, Brad, but you probably had a couple of paths to choose. Go off on my own, start a business, maybe make millions or billions on my own. Go to RBC's government affairs group and say, we've got a lobby in Washington and make this illegal. You may answer the question, but why one path over the other?
Sure. So
will you repeat the question or
so
paraphrase?
So at RBC government relations, why don't we try to kind of go down there? So glad you brought that up. The very first thing that we did is we went down to the SEC. And I remember lining it all up, and I had 10 pages of notes stapled in a book that I read word. I was scared to death, which was funny because I'd never met the SEC before. I'd never spoken to them, but RBC wanted us to go down and present it. And I went down and I presented it, and half the room said, what you're doing is not fair to high-speed traders because you're running them over. You're not letting them get out of the way. And another part of the room said, well, are you kidding me? They shouldn't be offering stock if they don't want to sell stock. So the room was divided, and I found it very odd that what I was saying wasn't appalling to everybody. And I got the sense from that this wasn't going to be solved through regulation, especially when we're dealing with microseconds. I think any rule that has the word microsecond in it is crazy because the industry will always evolve faster than the regulations. So that was the first thing we did. And at that point in time, it kind of became a little bit clearer to me that the market would have a much better chance of solving this than the regulators. And I still believe that today.
So one more question, please.
As you launch the exchange, hopefully later this year, do you think it'll become a magnet for ethical companies that want to be represented by an ethical exchange? And will that be part of the value prop?
Without question, I do. We've been approached by many companies, and the common thread I see in all of them is about principle, is about fairness and trust. And I think that I don't think you'd be able to convince a CEO who didn't have that thread, or an executive team that didn't have that thread of kind of principle to switch, because it's kind of like you never get fired for choosing IBM or something like that. There are people that are principally outraged, and I think that we are that initial group of people that want to move, and we have a bunch of them lined up. The common thread is its principle, and they care very deeply about the stock market. They care very deeply about their shareholders and about fairness. And their shareholders are who own IEX. I mean, you look, there have been dozens and dozens, Capital Group, T. Rowe Price, Norges Bank, Franklin Templeton, Teachers Retirement System of Texas, New York State teachers. They've all lined up behind us. This comment process with us fighting with New York Stock Exchange and NASDAQ has been the greatest thing ever for us because everyone's had to show their cards. Everyone's had to show their true colors. And I think it's been a great process for us. So yeah, I absolutely expect people to do that. And, we look forward to kind of creating a different kind of change. Ultimately it comes down to, and I know Tim showed this last night, showing the premium that ethical companies command. And whether it's a premium based on perception or whether it's just better decision making leads to better performance, I think probably it's a bit more of the latter because I don't know, I've never seen a chart like that before. I do think that people have to vote with their feet when they believe in something. And hopefully we give people an opportunity to do that.
So, well, I wish we had more time, Brad. So, first of all, please, everybody, I want a couple comments to wrap up, but thank Brad for your work and so Brad really wanted to be here. He really did. So we rang the bell for Women's Day. Erica Salmon-Byrne, our executive vice president, gave, I think, some wonderful remarks, and you had a great group of people there at your office a couple days ago, and you were sick and you couldn't make it, and everybody said, Brad really wants to be here. So he's resting up to be here. So we really appreciate it.
I'm on antibiotics, so don't worry about your book.
Anyway,
Yeah.
Thank you again.
All right,
and I believe there's some copies of the book, and if anybody wants to go out there and chat with Brad, and thanks again. Great job, man.